the linked exchange rate system and what you need to know about the US rate hike. The Federal Open Market Committee of the US Federal Reserve has been gradually raising the target range for the federal funds rate since March. The financial market expects the Federal Reserve to have multiple rate hikes this year to tackle inflation in the US. So what does the US rate hike have to do with Hong Kong? Let's find out together. Will the US rate hike cause capital outflow from Hong Kong? Hong Kong has implemented the linked exchange rate system for nearly 4 decades. Having weathered many economic and interest rate cycles, it has continued to work well. Hong Kong is an international financial center. Funds flowing into and out of Hong Kong's financial market are nothing unusual. In general, when the US enters the rate hike cycle, the US dollar and Hong Kong dollar interbank rates may differ. This may provide sufficient incentives for market participants to conduct carry trades. Market participants will sell Hong Kong dollar and buy US dollar to earn higher interest, which as a result will weaken the Hong Kong dollar. However, under the linked exchange rate system, when the Hong Kong dollar exchange rate touches the 7.85 week side convertibility undertaking level, and upon bank requests, the HKMA will buy Hong Kong dollar from and sell US dollar to banks at 7.85 Hong Kong dollar to 1 US dollar. After banks have sold Hong Kong dollar to the HKMA, the aggregate balance will contract. As liquidity in the banking system tightened, Hong Kong dollar interbank rates will face more pressure to go up. This will narrow the US dollar and Hong Kong dollar interbank rate differentials, reducing the incentives and scale of funds flowing out of the Hong Kong dollar. Hong Kong's financial system has a solid foundation with large foreign reserves. Capital levels of our banks are considerably above international standard. They provide Hong Kong's financial market with strong buffers and resilience to counter market shocks triggered by external factors. Therefore, the US's entry to a rate hike cycle will not affect Hong Kong's financial and monetary stability. Will US rate hike cause the Hong Kong dollar to depreciate substantially? According to the design of the linked exchange rate system, the Hong Kong dollar exchange rate moves within the convertibility zone of 7.75 to 7.85 driven by market supply and demand. Movements within such a small bandwidth of only 1.3% are hardly substantial. Under the operation of the linked exchange rate system we mentioned in this video, the Hong Kong dollar exchange rate will not weaken beyond 7.85 Hong Kong dollar to 1 US dollar. In fact, the weak side convertibility undertaking was triggered in 2018 and 2019. At that time, the HKMA bought Hong Kong dollar and sold US dollar according to the linked exchange rate system. You may wonder, when will interest rates in Hong Kong rise? Drawing reference from experience in the US's last rate hike cycle in 2015 to 2018, at that time the Hong Kong dollar interbank rates did not immediately follow the US dollar interest rate hike. Currently, there is ample liquidity in Hong Kong's banking system. We expect the Hong Kong dollar interbank rates might also lag the US dollar interest rates in this rate hike cycle. The extent of lagging will depend on Hong Kong dollar supply and demand situations in the local market. As for bank deposits and mortgage rates, banks will decide on the timing and extent of adjustment based on their own capital cost structure and other relevant considerations. You should carefully consider relevant factors when making property purchase, mortgage, or relevant decisions. For more information, please visit www.hkma.gov.hk